Alright guys, it's another one of these videos. So in this video I'll be covering a little bit and expanding a little bit on the model that I trade, or my go-to model whenever something isn't clear or whenever I'm not at my best on the charts. I basically trade internal to external range liquidity moves with an SMT. So to quickly go over what that means, I'm going to bring up the Russell chart, and we can see right here on the weekly time frame we have a fair value gap. For those that remember, or for those that have watched the Trade Smart series, if you haven't, I'm going to link it somewhere up here. And if you are familiar with Sniper's trading model, ICT's trading model, you would know that basically we wait for price to have an SMT inside of this high time frame PD array, right? In this case the PD array is just this fair value gap from the high time frame here being the weekly. So inside of this PD array we wait for some sort of SMT with a correlated asset. Then we jump to a lower time frame, and you know that from the weekly time frame the lower time frame is the 4 hour. So we jump to the lower time frame on the 4 hour and look for a confirmation to look for buys on Russell, right? Typically aiming for a 2-hour position or the buy side liquidity all the way up there. So that's basically the model that I'm going to be talking about in this video, but I'll basically be expanding on it from a lower time frame perspective. What that basically means is, for example, right here we have a 4-hour fair value gap, right? Inside of this 4-hour fair value gap we can actually trade another internal to external range liquidity move. So we could get price trading from this fair value gap to the sell side liquidity down there. So it will look something like that, right? To the relative equal lows over there. We look for the SMT, we look for everything else we look for, but this time we are dealing with intraday time frames. This is especially beneficial for those that are trading props, prop firms like, you know, futures props or even CFDs, but mostly futures, or those that have end of day drawdown incorporated with it. So like here for example we have the 4-hour. We can also work on the 1 hour, but I don't suggest anything lower than that. So on the 4-hour chart we have tapped into this PD array, right, into this CB, this fair value gap right here. The next thing we look for is some sort of SMT. So let's say here for example Russell took the highs, right? We have that swing high, was swept over there, and let's say we checked YM, or we checked NQ, or we checked ES, or whatever correlated asset that we have, and we see that it fails to take the high, right? So let's say it looks something like that on the other asset. So we could call that an SMT. And now we look for the lower time frame confirmation. On the 4-hour chart our lower time frame confirmation is the 15 minutes, and then on the 1-hour chart our lower time frame confirmation is the 5 minutes. So that's basically what I trade. That's basically what I would say anyone can trade on an intraday perspective. So basically the exact same model, the only difference being that we basically look for different time frames to find our entries. The second thing that I'm going to cover in this video is the new, I can't call it new because I've been using it for a few months now, but the much better risk reward ratio to give yourself when trading ICT's concepts. So we all know, if you're an ICT trader, we all know about entering fair value gaps to sell. We could have something like this, stop loss at the first candle that created the fair value gap, right? Remember, to create a fair value gap we need 3 candles. That's 1, 2 and 3. This is the first candle that started the creation of this fair value gap, and we can put our stop loss there, potentially aiming for the sell side liquidity over there, and this could be our trade, right? Something like this. Nothing wrong with that at all. But I've realized that if you want a higher risk reward ratio, this is not true for every instance, but for majority of the time we would get a higher risk reward ratio if your entry is based off of an order block, a breaker, or a mitigation block. An order block is basically where a change in the state of delivery happens. Take for example right here, we took liquidity, barely took it, but we took liquidity, and now price displaced higher, right? This shift is what made us say that price has now changed from a sell side delivery to buy side delivery, right? And now this last down close candle becomes a bullish order block. So this shift, this CSD, or the change in the state of delivery, is what could be used as an entry. And what I mean by a high risk reward ratio is because if you are entering at the body of this candle, with your stop loss being at the swing low, you could easily aim for this high, for example, and find yourself having a nearly 9R position, a very small risk and very high reward, and you can easily achieve a 2R entry, a 2R position. I know high risk reward ratio is not something that's really that enticing for many people, but this also means that you could potentially take many losses without fearing the possibility of losing your account or something. Now, for me to clarify on how I use that entry mechanism, we are going to take a live example on GBP USD from Friday's price action. On GBP USD, well, since I don't actually have the premium version of TradingView, we are going to go back in time using a different platform. And I actually have to give a shout out to Hugh Clark. He's the one that shared this platform with me, and I'm going to, let's find the screenshot right here. So he said, if you can't afford TradingView subscription right now and you want to do some backtesting, I recommend using Traders Casa. So Traders Casa is not sponsored or anything like that, not sponsored by them or anything like that, but it's just an interesting platform that I thought to share with you guys as well, and you could find it as a good platform to backtest. It's my first time using this platform, so I'm basically experimenting in this video at the same time, but I've signed into the dashboard, created an account. Let's see if there is anything to it. Let's add a new session. Let's call the session GU, starting balance. Let's say you were trading with a Fivers account and you were trading the 3 steps account, their bootcamp account, which basically needs, I think, 5% for you to pass a phase. And yeah, and I think you also have about 5% maximum drawdown or something like that. So let's see if we can get, something. Alright, so I'm going to switch to my intraday time frame, which is the 15 minutes chart, and we are going to look for, well, basically this is Thursday's ending, and we are looking to trade into Friday. So let's see how price plays out. I'm not sure. Okay, it's not that difficult. So right here, price was still meandering, not giving clear intention yet, but I had something interesting here. So firstly, we can see our, I'm not sure where all this everything is now, but yeah, we can see we are currently respecting this fair value gap, the CB. We have swept liquidity at the highs as well over there. We've displaced and now created this breaker bar, right? So this becomes a high probability breaker in my opinion, especially according to Finesse, and I would be taking a trade that looks something like that. Entry in the bodies there, stop loss at the high, aiming for 2R or sell side liquidity. In this case, the sell side just so happens to be 2R as well. So this would be something I would have as a potential setup and would look for an entry. But I think we saw something even more interesting on this same time frame. Let's see how price prints out. So price continues, but I think on Friday I wasn't looking at this massive imbalance. I was looking at this one here on the premium side of the chart. So I did potentially look for a setup around this area, but I wasn't in front of the chart, so I didn't execute on this. And I guess fortunately or not so fortunately, this did not play out, and we actually eventually ended up taking a possible stop loss there, tapping into this premium fair value gap. Now here was my debate, right? This is why I would sometimes not enter off of a fair value gap and prefer to enter an order block, given the high possibility or high risk reward ratio that an order block has. So firstly, we have not generated sell side liquidity here, right? We have many people wanting to buy this because we've tapped it for the third time. So I'm looking at this sell side liquidity here as a potential target. We could sell from this. Let's actually put the tool, so we could potentially sell from here, actually from this fair value gap. Maybe put our stop loss at the swing high because it's the safest one. Maybe even here, the first candle that created the fair value gap. But we are not sure if this is a continuation higher or a manipulation to eventually come here. But yeah, we can see that's nearly a 4-hour position. But one thing that I waited for and actually executed on was the order block. I waited for a change in the state of delivery. So now that we are rejecting, that's the key thing to note here. We are rejecting away from the fair value gap. We have closed below the last up close candle. Note this specific candle, this green candle, the last bullish candle. We have closed below it now. The fact that we've closed below it, to me, says this is a potential change in the state of delivery, and I could now look for an entry from here. So I had my setup looking something like this. I wanted to sell at the body of the order block, my stop loss at the high of the order block, targeting the liquidity that we have down here. Note that the risk reward ratio is less than the theorized one earlier, but the difference with this trade is that I have confirmed an intention for price to move lower. We have gotten the rejection away from the fair value gap. We've gotten a change in the state of delivery, and I could look for a continuation of this rejection. So this is what the trade would look like. And yeah, and I took this trade on Friday and thought to make a video about it today. So let's see. I'm not even sure. I've never really used a backtesting tool like this to actually take a trade, so I'm not sure how to take the trade here. So we're going to figure this out together. Yeah, I'm not sure how to take the trade, but either ways, let's just visualize it ourselves. Okay, we got ads. I guess the free one basically has ads built in, but I'm not going to buy a premium version of this program. We're just testing out things here right now, so let's just wait for the timer, and we close that off, and let's try and play. Okay, so price has really closed below now. We're potentially going to create a fair value gap here as well. At this point, it's well, it's not yet on New York time. Let's change it to New York time. So at this point, it's 7:30. The market is then the New York session kill zone is about to begin at 8:30. Right there at the end of the blue line, we'll get the beginning of the kill zone, and boom, we've been tagged in the bodies of the order block. We've disrespected this CB a little bit, but price is still holding. The only time I would consider moving my stop loss to break even is honestly this low right here, which we just got now, and price didn't even give us we didn't even get the chance to break even, and price just fell away from it. So yeah, this is what I like about order block entries and breaker entries or mitigation block entries. We just get high risk reward, and price just tells you straight away whether you're right or wrong, which is beautiful. Of course, as I said, if we have a fair value gap entry and you entered up here, there was nothing wrong with that. There's absolutely nothing wrong with that, and your model could perfectly work with fair value gaps. But in my opinion, I think order block entries would yield better results. So this is all I wanted to cover in this video. Firstly, look for the SMT, which we actually got here with EU. EU, I believe, took that high, but GU did not. So we got SMT, higher time frame PDRA. In our case, I believe we had a 1 hour. Yeah, we had a 1 hour fair value gap up there. So we have an SMT inside of the high time frame PDRA. That was the confirmation we needed for price to continue. I wonder if we could change the symbol. So could we go to Euro USD? What does it allow? I'm not sure it does. I don't know how these platforms work, but yeah, we had an SMT, and we got structure giving us what we wanted: lower time frame entry, order block confirmation and entry, and yeah, that's all. I feel like everything I've said in this video sounds a bit skimmed. It sounds a bit incomplete, but this is not meant to be a beginner video on ICT's concepts. If you are confused, completely lost in what I'm saying, I would say check out the playlist that I'm probably gonna link again in the description, but in the beginning of the video I pointed it up here somewhere, on making ends meet, and basically the model that I started trading that showed me profitability trading ICT's concepts. But for now, stay safe, good luck, and as always, good trading.